Are you trading cryptos on GDAX? Well, then you definitely need to know about the ins and outs of moving averages. There's no such thing as a holy grail when it comes to trading, but moving averages may be the closest thing. Sometimes they definitely do seem like they're magical. So come on in and join me, Blake Storm, today as we start our 4-part series analyzing and evaluating moving averages and how to use them on the GDAX platform. I really hope you pay attention for the next few minutes. We're going to introduce you to a fantastic tool that GDAX has on its platform, and it is the exponential moving average. So a moving average is just simply this, is what it says. It's an average of the last certain amount of periods that it looks at. This first one I'm looking at is a 12 period moving average. So what it does is takes the last 12 periods and basically just does an average. This is an EMA, which means exponential moving average, which basically means these time periods here and the last time periods in that 12 period cycle has more weight than like number 12. If you start a number in 1, 2, 3, 4, 5, 6, 7, all the way back to 12, 1, 2, 3, 4, 5 carries more weight than number 12. As opposed to a simple moving average, you'll see that sometimes on some platforms, which is an SMA, and on that all days are weighted. And I really like the exponential moving average because I want the more current days to carry more weight than these previous days. So this is a fantastic signal here. Again, this is the 12 bar or 12 period moving average. I'm looking at daily charts. If you go to any of these smaller time frames, it still represents a 12 period moving average. At first blush, this is one thing I love moving averages for. You just simply look at this line, this moving average line, and it helps you determine which way the market is going. It's simply going up, so you know you're averaging based on the exponential moving average that you're in an uptrend. Here you see the trend roll over, and now you're in a downtrend. So the way I trade, I would never go down. Here's some down days, and I don't really see a trade here, but potentially if I did, I would not go on a short trade when this moving average is pointing up. Just like here, if this moving average is pointing down, I would not go with an up trade. I'm always looking for down trades. So just that little bit of information there alone keeps you much safer. It's not a fail-proof or foolproof system, but it keeps you in a much safer situation. The way I would like to use EMA based on this chart is when a crypto closes above, this one here is coming below this EMA, you can see it here, it's the only time we see it, closes above the EMA, I'm looking to buy or go long. If I miss it, say if I wanted to buy here as it closed above, I'll wait till it pulls back and tips or taps or comes near the EMA, and this will be another buy signal. Let it go and let it come back down, and it's another buy signal, based just strictly on the EMA. In my strategy, I look at quite a few things other than an EMA, but just strictly based on pure EMA buy signals. As this thing moves away from the EMA, I don't want to look at buying. I want to buy in close to the EMA. A stock or a commodity or a crypto, they're all kind of like a rubber band. As that rubber band stretches out, it has a tendency to want to pull back in. So you'll see this thing stretching out here, it wants to come back in. Here it stretches out, it wants to come back in. Here it stretches out, it wants to come back in. Because this is the average of a stock or a commodity or a crypto, is always going to want to come back to its mean, to its average. Same thing here. It's going down. You'll see that it needs to snap back in place and come back up. Every time it gets far away, it has a tendency to snap and come back toward that moving average. The trick is you just want to be on the right side. The one piece of advice I could tell any crypto trader, if they don't do anything else, is to make sure you're on the right side of this moving average. Make sure if it's going up, you're buying. If it's down here, you're selling, unless for some reason you're in it for the long haul and you think 5 years from now cryptos will be better, 10 years from now they'll be even better, at some point in time this isn't going to be the case. So you need to start practicing now. Hey, it's below here, I need to look at going down or selling and holding and parking my cash on the side. I think there's a great opportunity here in 2017 as this crypto, this Bitcoin, comes and closes below this 12 period EMA. I'm looking at selling right along this time period, go into a cash position, a US dollar cash position, and waiting until I get some indicator down here that cryptos are going to go back up. I believe they're going to go back up. That's why I'm in cryptos right now. I'm beginning to get into cryptos. I've been trading stocks and indexes and selling options for a couple of decades now, and I think there's potential for cryptos to do really well. So I'm sticking my toe in the water with cryptos and using my 24 years of trading to begin looking at this. I could foresee at some point in time down the road this thing is going to continue up, but I don't want to buy in at 1,000 if I could buy in at 8,000. Right now there's nothing telling me that it's going up based on this moving average. So also you have a 26 period moving average, which is basically the same idea. The thing with moving averages, the less period you get, the closer you're going to get to the underlying security or crypto. The further away, or the more periods in the moving average, the further away you'll get from it. It's a 50-day is a pretty popular moving average. It would run along this area here. Maybe a 100-day would run along here. The more time periods you have, typically the further it gets away until it gets ready to cross. So the smaller the EMA is, like this 12 period, it will cross quicker, signaling potentially a selling signal, and I would feel comfortable with this 12 period EMA. I would actually like a closer in time period EMA that would maybe get me out of here. So it crosses here, and this is first signal to me we need to get out. But then down here, the stronger EMA, the 26 EMA, it closes below the 26 EMA, and this tells me, yes, we really have problems. If I didn't see that signal here, I see it here, and we really have some problems. I think these problems are probably short term. There's a lot of bad news coming out about some cryptos right now. Also, some people are taking profits from this area here in some period of time in the future. I don't have a crystal ball. I don't know when it is. It'll turn and go back up. But for now, I would be out of cryptos. I'm sitting here on the sidelines waiting for a buy signal, getting ready to put a little bit of money in here, but it's not during this time period, just simply based on moving averages. And I always look at moving averages in some form. If I'm on a different platform, maybe not the 12, not the 26, but I am always considering moving averages. Another thing you want to look at moving averages is the amount of slope you have in this moving average. The slope tells you how strong the trend is. Here you have not much slope. The trend isn't very strong. Here as the slope picks up, you see the moving average starts pointing up, indicates you that there's going to be strong buying power. Here slope is a little going down, tells you to be some downward pressure. Here possibly we'll have to see how this develops in another day. It looks like it could be some more sharp downward pressure just based strictly on the moving averages. You're also looking for crossovers. There's not enough data on this GDAX platform, and that's one drawback to it, very little data. The moving average does not cross over here. It touches the 12. The 12 touches the 26 and almost crosses over. We may get a crossover here in the next day or so. Definitely another bearish signal when your 12 crosses over below the 26. So you look for your Bitcoin to close below the 12, bearish signal. Look for it to close below the 26, bearish signal. Now, if the 12 closes below and crosses over the 26, bearish signal. So right now, based strictly on moving averages without looking at anything else and not having anything else pulled up, I'm saying this is a bearish underlying cryptocurrency today. Right now it's at $13,714.99. So this is Blake Storm, sniperinvestor.com. Be sure to subscribe and ding that bell so you'll get notifications. We're coming out with new videos daily. Tomorrow we will come out with another moving average video, taking it a little bit deeper. sniperinvestor.com. Subscribe. And always remember, when you're trading, you must develop the mindset like a lion. Remember, if you don't kill it, your family doesn't get to eat. Blake Storm.